We're going to get the spoken word on stock leadership now for the month of February from our Chief Equity Strategist, John Blank, who joins me here. He's right next to me, as a matter of fact. Not on Skype like you normally are.
Not on Skype.
So stock leadership changed in February, you say. It went from what to what?
It basically went away from consumption to still cyclical enterprises, but not consumption, not consumer discretionary, not consumer staples. So we have seen, and we saw this morning with a very weak retail sales report, there's been flat sales outside of autos for 2 months now because of the cold winter. And that has hit earning estimates for any consumer stock. Whether it comes back, whether now is a time to buy the consumer stock, it's a good question. There might well be. But from a earnings estimate revision perspective, we're now seeing IT, industrials, healthcare, and the banks start to provide the leadership.
And this morning is the morning of February the 13th as we're sitting here talking. So with this change in leadership, is it still a buying opportunity?
I think so, Terry. I think you still have to stay bullish. I think as long as you have payrolls that are coming in even at 100,000, it's giving us a muddle-through economy. It's not great. But it leaves a platform, it leaves a platform for that acceleration to happen. And if you really do buy the story that people are just holding back until the weather turns better to get out and shop, then the job situation really has improved, which was the household survey said, then you've got the base here for a good buy.
You say that the market's valuations have been ignored. Why is that important? Are valuations too high?
It's the issue of the day, Terry. I don't think for the rest of this year we can dismiss any valuation concern. My estimates of fair value in this market, a mid-February market pricing on a full 2014 outlook, is anything from about 1785 to about 1835. So that 50-point span on the S&P is where I would say this market is fairly valued. And we're this morning at about 1820, so you can see that we're in that range. We're now fairly valued. We started the year at about 1850, and now the market has basically agreed with these estimates that this is sort of where we need to be. And what we're going to watch is this slowly grinding forward period of time pass, and those estimate revisions rise and rise and rise. So you can get a spring rally and a summer rally out of a market like this, but it's going to be a different feeling market than last year. We don't have this coming out of the canyon effect of reflation. We're just grinding up forward on a cyclical move. It's a much more modest idea, and there's going to be some setbacks because of the capital flow issues that are coming out of Europe and into the United States and back again, and emerging markets, capital coming into the United States and out again. These types of flows are going to cause some volatility to happen all year too.
All right, with the change in market leadership, you still have some companies that are on your radar.
Yeah, Terry, I like 3 companies we'll go through today. I like Northrop Grumman.
Okay.
You can still find a buy on air travel and the airlines, and that's telling you that all the way down that system through the aeronautic space, you're going to find companies that are worth picking up. So Northrop Grumman, aerospace and defense, that industry, that part of industrials, that company, I like. I also like CNO Financial, ticker CNO. CNO is your classic insurance company. Insurance companies are pro-cyclical. What that means is you have more people with jobs so you can raise premiums, and you have less losses because there's less stress. So you get both sides of the balance sheet, both sides of the income statement for the insurance companies, giving a lift up through a cycle. So again, we're seeing a cyclical part of financials providing leadership, so I'm still confident in the bull market, but now we're looking at CNO Financial, which I have not mentioned before. The third one I'll throw out there is Almost Family Incorporated, ticker AFAM.
Right.
AFAM is basically offering services and facilities for senior living. And this type of environment is a healthcare play, it's a baby boomer aging play, and you're still going to have some growth with some defensiveness. That's the kind of space that's probably going to pay off in this market.
All right. Well, we appreciate you stopping by to give us the spoken word on market leadership. And with John, I'm Terry Ruffalo.